Mr. Shashi Krishnan, Chief Investment Officer with Birla Sun Life. He joins us on the show. Shashi, morning. What a delight to have you back on ET Now. Congratulations on your new profile. You're joining us for the first time in your new avatar. Shashi, let me first start with the broader and the big picture. Now, there is no mystery in why markets are in a spot of bother, but at these levels, do you think markets are pricing in all the negatives? And do you think a disorderly Greece's disorderly exit from the EU at these levels is priced in?
I think there is a lot of negativism that's being built into the market. This is not to say that the situation in Europe isn't alarming or the situation in the US isn't deteriorating. Both are true. Europe is going through, a fair amount of crisis, especially with, the so-called disorderly exit of Greece expected or being factored into where markets are. And I think the US is also, reporting a lot of, mixed data in terms of, the broad economy. But I think, for investors who invest into the Indian market, this is clearly an opportunity because all of this is reflecting in valuations of Indian stocks, and Indian stocks are now available at very, very attractive valuations.
Shashi, is the current panic a good opportunity to buy into equities as well?
Well, yes, I think, markets are primarily driven by two things. One is, earnings expectation, and the second is, global flows. At this point of time, obviously, there is a risk-off trade and, global flows are a little slow. But once, global flows start coming back into the Indian market, I think, Indian markets will start recovering.
So, Shashi, once the dust settles down, global risk premium will subside, markets eventually will hit a bottom. So my question is that when markets will hit a bottom, which sectors will revive the fastest and which sectors will lead the rally?
I think at Birla Sun Life, at this point of time, we are reasonably optimistic from the medium to long term. In terms of our exposures, we have at this point of time exposures to dollar proxies. We have exposures to the Indian consumption story. And I think the Indian consumption story is clearly something that hasn't given way because private investment, private consumption clearly is sort of keeping its head above water. We are also exposed to many of the infrastructure financing companies like the power financing and some of the private banks because we believe that they are proxies for the growth story in India. So we do believe that the medium to long term equity story is very good, and for young retail policy holders who intend to take long term policies, I think this Indian equity at this point of time will afford a very, very good opportunity.
So, Shashi, what is the best way to invest in consumption theme? Would it be via banks, autos, or FMCG?
We play these two ways, whereas we are also invested into direct consumption stories. We also are invested into the mortgage companies because we do believe that the mortgage companies are actually paying the consumption story and are significantly better placed to take advantage of the demographics which we see in India.
By the way, LIC Housing today has touched a new all-time high. Let's look at LIC Housing. So there are only two mortgage companies. You can read it between lines. One is HDFC and the second one is LIC Housing Finance. LIC Housing Finance 239, whereas HDFC 623 rupees. Shashi, you have a fairly large and a decent exposure to IT. So what makes you bullish on IT? Currency, environment, or valuations?
I think one, this exposure to dollar proxies, clearly the currency movement is, the upside. But, over and above the currency movement, I also think that, IT spends globally are not going to fall, and this would be a great advantage to most of the Indian IT companies. Indian IT companies are going up the value chain. They are able to get larger sized orders, and I think they're doing all the right things. So, till very recently, maybe these IT companies were fully valued, and you may have thought that they were expensive. But these valuations, I think there is a great opportunity.
So Sashi, what about autos? Because they've been outperforming, but given the April sales data, is the springtime over for auto industry as such?
I think, again, it is the demographics and the domestic consumption story. You will over the next couple of years see a larger number of people buying two-wheelers and passenger cars. And, I think there will be, a clear opportunity, and there is an addressable market for all these people over the next couple of years. That's one. And two, I think if we do think that the commodity cycle will ease a little bit and interest rates will also come down maybe towards the end of the year, those will also be positive for the automobile sector.
Now, Shashi, if I could crudely divide the auto space into three. Now, there are three types of auto companies in India. Tata Motors exposed to global growth. Passenger car companies which are exposed to urban growth or semi-urban growth, and then two-wheelers which are exposed to rural growth. Which part of the auto business or which sector within the auto business you are bullish on?
So I think as investments, we would be invested across, all the three stories, the rural demand sector through the two-wheelers, the passenger car segment through the urban demand and the rising aspirations of the Indians, and the commercial vehicle sector, which primarily reflects which is a proxy, in my opinion, for economic growth itself in this country. So I don't think, I would think that all three of them would be, good enough places to be in. Given the fact that there will be these cycles where the prices will go up and down.
Okay, Sashi, just hold on to that thought. LIC Housing Finance, let's just bring up that stock price up for you, because that has made a fresh high for itself. So even in a market like today's, there are stocks which are scaling up if they LIC Housing Finance currently at about 238 thereabouts. Quickly bring you a status check on what the equity markets as well are up to. So SPI is holding up, so is Unilever and Cipla after a cool off that it saw yesterday, and BPCL as well marginally in the green right now. Ditto is the case with the power grid too. TCS, Wipro, Coal India ahead of its standalone earnings is on the brink of breaking into the green. Sashi, how would you play the capital goods and metal cycle currently?
We are underweight both capital goods and metals. Metals primarily because we believe that with China slowing down and the commodity cycle slowing down, there will be some sort of pressure on them. And in terms of the capital goods sector, whereas from a long-term in India story, capital goods will be something that will perform. I think at this point of time, the problem is that the investment cycle has slowed down so much that the capital goods sector is looking a little challenged, and so we are marginally underweight in both these.
So when do you really see the tide will turn for a L&T or for a BHEL, for that matter, any of the machinery or capital good companies?
I think we will need to see some more, something more being done in terms of the investment cycle. And I think two things. One is we need to see the investment rate going up, because, we've seen both the savings rate and the investment rate fall. And we need to see signs that the investment rate and the savings rate have started have reversed their trend and going up. And two, I think more importantly is the fact that we need to see confidence returning, because it's only when confidence returns that people will start investing into new projects. And once we see that, yes, I think that will be the place we will look at.